Hello guys, it's David here. I'm doing EU and AU London recap for today. So I'll just go over sort of this morning's price action, sort of go through my thought process on it, what I was sort of thinking as the price action was forming, and hopefully it might take some lessons from it. So we'll start with the daily and AU. Obviously, we're bearish overall with this is sort of our swing range. So then the last couple of weeks or so we've been basically pulling back here, and then we've just about mitigated the EQ of the leg, and we've mitigated this supply, which is pretty significant supply because it's a flip zone. As you can see, we had this sort of reaction to the extreme demand, pushed up, and then this is sort of the candle that caused that reaction to fail, and then it also caused the break of structure as well. So it is quite a significant area, and it would not surprise me at all if the bearish trend continued and we took out the week low from this supply. But again, you have sort of the refined little candle within it, so we might push up a bit higher. So coming into this morning is where we'd sort of mitigated this range. So I was thinking sells make a lot of sense because obviously there is also the potential that we could tank and take out the week low, but at the very least that we could pull back into this demand and maybe push up higher to mitigate perhaps the refined pivot supply within that range. So yeah, bearish overall. We've had this sort of bullish eyeball, so buys do make sense until this sort of low goes. But yeah, as I said, I don't pay too much attention to the daily overall because obviously it takes a lot of time to play out, and we're only looking to catch 20 or 30 pips in a move. So the 4 hour, obviously the 4 hour is bearish. We're stuck within this sort of 4 hour range. So this is the pullback. You could have counted this as a break of structure and had your 4 hour marked as bullish. Personally, I just marked it as internal structure. So this is my swing high and this is my swing low. So you had the other bullish eye boss here. So obviously we're expecting sort of price to pull back and mitigate some demand in here and then push up higher until basically the market shows us that the internal trend is going to change, which will be when this, which would be when this low gets taken. So, but obviously we have to be aware of the fact that we mitigate this supply here. So we could roll over to the downside, but with the refined sort of 4 hour pivot within that, then no inducement either. So on the 4 hour, just looking at the sort of price action within the daily supply, it would not surprise me at all. Basically, if this liquidity got run, this zone got run because of the lack of inducement in front of it. So then after that there, you could be looking at that 4 hour supply, or ideally this supply nested in the daily. But coming into this morning, 4 hour, I had no real massive clear intentions. I was aware we could get the pullback, but then we'd sort of pull back, we mitigated the range, hadn't hit anything refined within it, but then we pushed up and then price had failed to take out the high. So at this point, this high is weak as it failed to cause an eyeboss around, and this low is weak because it failed to basically put in a new high. So 4 hours pretty inconclusive. It could have gone either way. Like, you could make the bearish case for price basically pulling back into the demand, but obviously 4 hour internal is bullish overall, so it could have just continued higher. That's not valid demand for me at all there because it didn't achieve on it, it didn't even achieve a shock, so I would be fully expecting that low to get run at this point. So that's the 4 hour. M15 then, sorry, I thought I deleted on me. Coming into session this morning, it was pretty clean. The M15 was bearish. This was the most recent break of structure. So this was basically one complex pullback into extreme supply. So then having come into the session, we've mitigated the extreme supply. We had a couple of eye bosses, which is obviously a very good sign because it's a sign that the bearish internal trend is sustaining. You know, it's respecting these supply ranges the whole way down. So obviously your swing is bearish and your internal is bearish, and then we had this pretty clean range here, and then we had this pretty clean POI within it that you can see a lot of momentum come in, basically caused this price to close below this low. So obviously massively favoured sells. This was the our protected internal high at this point. So the expectation was that that would hold, and this was the weak internal low, so obviously the expectation was that that would be run, which is essentially what ended up happening with this piece of price action here. I really like this demand or the supply zone. Was very happy looking for sales from it, but I exercised a degree of caution because we'd already had the first mitigation of it. See, we got a bit of a reaction to it, got the shock, but see, price just smashed up. So at this point, when you've mitigated the EQ of a supply zone and it's failed to follow through, it is a reason for a degree of caution. Now again, on the M1, if I could have got in up here and then sort of got my trade to break even before we sort of mitigated this sort of supply. Now again, it's not the strongest supply in the world. Price just didn't quite close above the high, but obviously there was enough demand within this here to basically cause price to take out this high. So at this point, I didn't want to be trading directly against that demand on the M1. So sort of coming into session this morning, I ideally wanted to see basically the chalk, which is the red line, and flip, which is basically the reaction to this demand failing, which we ultimately got. So there were some potential sells in here, but I personally didn't take them because we had mitigated the M15 demand before coming back up to the entry. And then when we got basically what I wanted to see, when we got the flip, the failed reaction there, the chalk here, basically didn't get an entry model whenever price pulled back into the supply. So that's pretty much why I didn't take any trades in M15. Love the overall story. Like the M15 was very clean. You know, we had swing and internal aligned, we had clear ranges, supply being respected. Really liked this POI. It was just sort of the fact that it had already been mitigated, and then obviously pushed up higher, mitigate, you know, close above the high, given a sort of demand here. Just didn't want to trade directly against that because, you know, like whenever that happens, you know, if price pushes up higher, you know, a lot of times it can just keep going like that. And obviously, yes, everything was bearish, but it's just I don't want to be trading directly against that. So I'll drop down to M1 and sort of go through some of the setups. Yeah, you can see here, this is basically the first reaction to M15 supply. Obviously that gets swept. Again, we've another sweep here, which is beautiful, exactly what you want to see. And we also mitigated the extreme M1, which again is another big confidence factor. You can see it's swept behind that M1 high as well, which is another positive confidence factor. So if I could basically, if the entry model presented here, I know this technically before session, but if the entry model, say, presented here and we got the chalk and I get in here, then I could get my trade to break even before we come in here, then yeah, I probably would have looked for an entry there. But it was the fact that basically we mitigated the extreme and then we pushed down, we mitigated this M1 at the extreme of the M15 demand, and then just in my mind, I just wanted to wait to see for basically this reaction to fail, which is obviously here, and ideally a chop, which is that line there. But yeah, for that reason, I wasn't keen on basically leaving an entry there. It's valid. POI had already been mitigated, the wick wasn't, so yeah, it makes sense to refine that there. You had a bit of inducement in front of it there, but personally it just wasn't the cleanest. Like, if we use bar replay and sort of at the start of the London session, it's like price was sitting there, it's like you had this sort of range here, which is a flip, because you see we got the close below the reaction, that's your M1 shock point there. So then like, you know, you could have looked enter there potentially, like that there isn't completely mitigated, so you could have entered there. I think it's just personally I wouldn't really be thinking about entering here, because I'd sort of been viewing basically that this range was mitigated by this candle here. So I personally wouldn't have been looking to set an entry order there. And then the fact that we have mitigated the M15 demand here, I just wanted to see that fail before looking to get involved. But I know somebody has caught it, so if it fits your plan, great. But it is quite important to understand why that is slightly on the more aggressive side, because pretty much rule number one for me when entering on the M1 is that I don't want to basically trade against that on the M15, and in this case we have mitigated M15 demand, so tender there, like price could have easily just kept pushing up to respecting demand, but then obviously it does make sense relative to the whole structure, the internal and swing were both bearish. So yeah, look, that's just how I was seeing things. I was maybe more conservative, but obviously it worked out today. But I think it is quite important to understand why it is a more aggressive setup. And then sort of, there was another potential entry here where basically, price had pulled back, but then it reacted to the demand, and then we sort of had the pullback, and then this was sort of the first sign that basically this extreme was going to hold. So then you can see, like, you basically get the pullback into it, the flip, reaction fails. But even if you entered like on the EQ of the range with a 2 pip stop, you wouldn't have been tagged on it. And again, it is more aggressive because this demand could have held, M15 demand could have held, and basically this could have been like a fake out to maybe mitigate that M1 demand, and then it could have continued higher. So at this point it's still more aggressive. Then basically after we got the M15 shock and the flip, which is there, I'll just use bar replay to go in here. Yeah, you can see we pulled back into the M15 POI, which is exactly what you want to see, and then sort of mitigated here. There was technically a shock there, because as you can see we took the high of the inside bar, and then that was your active low at the point. But that in and of itself is nowhere near enough an entry for me. So I was sort of watching this form, and we sort of forming this perfect equal highs. There was this sort of M1 zone as well just above it. So at this point I was sort of thinking that we might basically sweep this here and then liquidate it, and then we would get the entry model and sort of go from there. But unfortunately it didn't happen. So there's no entry model there for me, and nothing that met my plan. I was basically waiting for the highs to get swept here. But yeah, so no entry there. And then obviously you've built the whole M15 story. M15 internal swings bearish. You're expecting the weak M15 internal low to get run, which I believe is there. So yeah, it makes sense. We had this sort of M1 POI here. I think somebody has left a risk entry on this here. That is way too aggressive for me, because like, yeah, it makes sense. It's like you have a strong M1 leg, so obviously it caused this M1 break structure here. So in theory, that high is protected, but then like that POI, like you think of what we use to evaluate a POI, liquidity. It's like it didn't sweep liquidity. It's just a single candle, so there's no sweep there. It is no inducement. It's a pretty straight push. There's this sort of you can't, like, all those candles broke the previous candles low, so there's no inducement there. You can see we swept this low before coming back up with a lot of momentum, which again isn't ideal. And then just the equal highs behind, it's like that's just asking to get swept. So there's no way I'm leaving a risk entry there. It's way too aggressive for me. I would have considered an M1C from the M1 POI, but again, I was just being more conservative, because when you have equal highs like that there, it's just asking to be swept. So technically was the entry. You can see there's the chalk. So then you have sort of the entry POI on that inside bar, and but again, it's like, you can see it just wicks it. It's like, it's just way too aggressive for me, considering the momentum, considering the sweep. Sorry, considering you had the sweep there, the equal highs there, no inducement, didn't sweep liquidity. You just would have wanted to see something a lot clearer. Now obviously that's a bit more momentum there. And then it's, the entry was there if you went looking for it, but again, at this point there was nothing too convincing. But then it obviously absolutely tanked after that. I'll go back to the M15 now. Obviously at this point, sort of this price action pretty messy. See, it's a lot of, it's not clear momentum. Like, it's sort of, there's bullish candle, bearish candle. It's like no massive clear momentum. But then obviously it is mitigating all the zones on the way down, and then coming up towards the end of the session, we basically had this unmitigated inside bar. You can see it got engulfed, and then price basically pulled back into it. So you could have looked for an entry there, but I think it was outside session hours, whenever. Yeah, that's the M1 shock there. So didn't get the shock to 5 past, and then you would have been basically, again, it's not the cleanest. It's a pretty corrective sideways move down. So there's no clear POI. That probably would have been the pick of them, but you can see price just smashed up straight through it. At that point, it's like you're not really trading. you're sort of trading in the discount of the internal leg, which is fine. Like, it's more aggressive, but like at this stage, the expectation is that all these ranges are going to hold until basically the week low gets run. So yeah, a lot it's valid, but you're selling in the discounted internal legs, not ideal. Personally, I'd just be waiting for something clear there, but a lot of it makes sense. But yeah, very clean price action. Pretty annoyed that I didn't manage to get involved in any sales, but it shows the power of waiting for, like, rather than trying to force things. Like, technically this here yesterday was pro M15 trend, but like, life's just so much easier whenever you wait for the order flow to shift. Like, you get the bearish IBOS, so then at this point, swing and internal are aligned, and then one swinger and an internal are aligned. That's whenever you just get the nice price action where everything's respected, and you can just keep getting in sort of on any valid supply, and it's like, it just feels easy. You keep targeting the weak internal low until eventually you run the weak swing low, and yeah, it's sort of, the key is sort of waiting for this sort of price action rather than trying to force things whenever things are unclear. But that's AU. I'd say very clean. Bit annoyed I didn't get involved on them, but it is what it is. No point in dwelling on it. AU then is a similar story. I've had the bullish IBOS there, so internal is obviously bullish. I've come into this flip zone. It's a flip zone because you can see the reaction to that inside bar of the wick. So at this point, knew it was very likely that following the IBOS that we might even get a decent pullback into here, while also bearing in mind that it's bearish overall. This is our strong swing high, this is our weak swing low. So the expectation is that ultimately this low will be run, so there is the possibility that it could happen from here. Now, obviously a lot has to line up in the 4 hour and M15, but it is possible that we could roll over the downside from there. The 4 hour, see, we came into this, had this sort of supply here nested in the daily wicks. So this sort of following the break of structure, I was sort of thinking, yes, it's very possible that we may get a decent pullback down to, like, say, this supply, which obviously lines up nicely with the daily zone as well, and obviously look for the continuation of the trend higher. But at this point, you can see, like, we pull back into these wicks. They were respected, price pushed up higher, and gave us an IBOS. Let me delete this. Yeah, so basically pushed up higher, gave us another IBOS here with a close above. So then coming into session this morning, yeah, I was aware that we could get the more complex pullback, but coming into session, we had pulled back into this range, and demand is still being completely respected in the 4 hours. So it was completely possible that we basically keep going until the market shows otherwise. So before I sort of confidently look for sales to target sort of the discount, I ideally want to see basically demand fail either this range or the pivot, and then obviously I'll be a bearish IBOS there as well, which once we sort of get that, then we can sort of target the more complex 4 hour pullback towards the EQ of the leg. But obviously, yeah, so just basically coming into this morning is where we could get a bearish 4 hour pullback, but at this point 4 hour demand was still being respected. So on the M15, I sort of didn't want to look for sells unless we started to get, like, clear signs of bearish intent on the M15, which is obviously ideally a break of structure to signal that the M15 trend has changed, or an IBOS that the internal trend has changed at least, and then sort of trading line that. But that was sort of governing my thinking on the M15. So coming into session this morning, the M15 is obviously bullish. This was our most recent break of structure. This was the weak swing high. This was the strong low. We had pulled back here, mitigated the EQ of the leg. So coming into session this morning, it was very possible that basically we would continue here and take out the high, and basically the bullish trend would continue, because we'd obviously, the pullback, it was very possible the pullback had done its job by mitigating the EQ and wouldn't need to go any further. There was the potential of looking for sells from around here to basically target this sort of demand range down here, so sort of take short-term sells before sort of flipping your bias and looking for buys from there. But I wasn't massively enamored at all with selling from here, because the 4 hour demand ranges are still being respected. So it was very possible, like that's a 4-hour demand range to mitigate the EQ of it. So it was very possible that basically it would just keep going higher. So I wanted to see something super convincing, like ideally a bearish IBOS. Personally, I don't count that as an IBOS because it's not at all significant enough for me relative to these here. So I'm basically viewing this as a shock to basically pull back into demand here before potentially going higher. One handy tip, sort of when you have sort of a minor pullback like that and you're not sure whether it's significant enough for M15 structure, a handy tip that I picked up off Tomas is to basically look at the 1 hour, and it's like you can see on the 1 hour it just completely clears up all the noise. You can see that's basically just all one move up. It's not significant structure at all. And then obviously you have the sort of more significant bosses there, IBosses, sorry. So at this point it's very likely that even though we're seeing some bearish pressure now, and it is valid to look for sells from here, that at this point we're only going to mitigate basically this range and push up higher. So yeah, there's nothing really doing for me on the M1 during London because I pretty much had my alert set here, and I was basically looking to see, because we were sitting around here, I was basically looking to see if we maybe crack back in here and then maybe look for the entry model to target the week high. But then I was aware price had to come back quite a distance to do that, so I wasn't really planning. I was sort of coming into session sort of thinking that I'm probably not going to get on an AU today, but you can see price just kept trickling up very correctively, and then towards the end of the session we got the wick break chalk, which gave us this valid supply. Again, not the biggest fan of the chalk, not a massive sign of bearish intent. Now we've had a bit more of a breakdown, and it's possible that we could pull back in here and then come down here, but again it's only probably a short-term pullback before we sort of look for buys from the previous demand range. So yeah, M15, there was nothing really doing for me this morning. Price just trickling around. Favoured buys from here, didn't get there, and then wanted to see something super convincing, basically look for a sell there and an IBOS or something like that, but we didn't get that either. I'll just drop the M1. You can see this is the wick break shock. You can see how unconvincing it is even on the, like it's only a wick break in the M1, so technically even in the M1 that high is weak. So pull back into the M15 demand. You can see you had a bit of a correction, push up. So you had your mitigation and liquidation, you had your shock, had your V-shape. So again, it's valid tender in that supply. No flip really, which isn't ideal, but you would have taken a quick loss there on it. But again, it's valid if you want to be aggressive and try and play the pullback following the aggressive chalk. And then would have sort of preferred this entry because it's more convincing sweep and then sort of clear bearish momentum, and then maybe if you pull back in there, look to target short. But I think that was right at the end of the session, and the price didn't mitigate it on it. So yeah, that was pretty much it. Missed the sells on EU, so basically probably being a bit too conservative for my own good. But to be honest, I'm pretty happy that those decisions will be the optimal decisions over a large enough sample size. Yeah, I want to sort of re-emphasize that, like this setup here in particular, like this one, these make sense because you're trading in line with the M15 structure. You're expecting the demand to ultimately fail, so that makes sense. But if you're leaving a limit order there, it's like obviously people have different risk tolerances. You know, some people are a lot more aggressive than me. That's fine. I just think over a large sample size, you're going to get destroyed there if you leave a limit order there. So if it played out for you in this occasion, I would really question whether it's something that you want to take over large enough sample size, because I think there's so many negative confidence factors, like with the liquidity behind, no inducement, POI didn't sweep. It's like there's so many reasons there for that POI to fail that yeah, particularly after like sweep of the low, huge wick and a V-shaped recovery. It's like that's one that if you took it and it worked out for you today, I think you should definitely consider whether it's worth taking over a large enough sample size, and try to keep taking them, track the data on them, see how they work for you. But yeah, that's the one that I can understand. This here, that's valid. Yeah, that's a good trade. I can understand why people took it, but if an entry there is just way too aggressive for me. But that's it anyway. Hopefully it's took some value from that, guys. If you've any questions, run and stick it in one of the public channels, and I will get back to you, and hopefully we maybe get a good conversation going around it. And hopefully we'll all learn from each other. Thanks very much, guys.